In a bid to dominate the space economy from end to end, a rocket builder just announced they're buying an entire orbital communications network. But Wall Street somehow decided to dump the stock anyway. Welcome to Earnings Unscripted. Today's August 10th, 2026, and we're looking at Rocket Lab's second quarter, ticker RKLB. And Miro, it really looks like they're trying to build a completely self-contained space empire up there.
Yeah, Peter Beck actually used the exact phrase, a self-licking ice cream. But look, the top line demand's undeniably real. They brought in roughly $234 million in revenue, growing a massive 62% year over year. And their total backlog swelled to a record $2.36 billion.
Right. So on paper, things look pretty bulletproof, but the market clearly felt the weight of what it cost to actually run that empire. The stock went on this wild, highly volatile run up to a massive high mid-quarter, but the post-earnings tape was just brutal. Shares dropped over 10% right through the extended session. And quick thing, since we're talking market reactions, remember our analysis is just personal opinion, so please don't use this as actual investment advice.
No, definitely don't. And the sell-off starts to make sense once you parse the segment details. I mean, launch revenues sequentially dropped 30%.
Wait, how does that happen? They didn't slow down their actual physical launch cadence, did they?
No, they didn't. Physical volume was basically flat, but they flew a heavy mix of suborbital defense missions this quarter. And because of some extremely quirky accounting rules for those specific defense flights, most of that cash was already recognized as revenue in previous quarters during the build phase. So they did the hard work, but the quarterly print looks starved.
That has to be incredibly frustrating for management because operationally, they're pulling off absolute miracles right now. Did you see that breakdown on that Space Force drill?
The Victus Haze mission? Yeah, that's just wild.
It's completely absurd. The government basically gave them a single day's notice to launch an active, mission-ready spacecraft. It was essentially a pop-up readiness drill to test national defense capabilities. And Rocket Lab built out, fueled, and launched the thing in a matter of hours. They even caught the uncooperative target asset in orbit days faster than the military demanded.
Right. So the engineering competence isn't the debate here. The real issue is cash consumption. Integrating these distressed component acquisitions like Mynaric is pulling down margins hard. And meanwhile, they're pouring a huge amount of infrastructure capital into their upcoming medium-lift rocket, Neutron.
Well, and they heavily diluted shareholders to pay for all that development, right? Because they took advantage of that mid-quarter price surge to raise a massive amount of cash before terminating the sales program.
They did. So the balance sheet's suddenly dripping with liquidity, but the owners absorbed all that equity dilution to get there.
Okay, so that actually leads directly into something that really confused me in the gross margin math. They apparently caught a lucky break with some non-recurring tariff refunds, but then immediately burned that new cushion on a preemptive inventory reserve against their second Neutron rocket. And the first one hasn't even flown yet.
It's completely counterintuitive, but it actually makes perfect sense if you look at their engineering culture, especially down at their test facility in Stennis. They aren't trying to build one pristine, flawless vehicle for that initial Neutron launch. They're out there deliberately abusing the hardware on the stands.
Wait, what do you mean by abusing it? Like running basic stress tests?
Way beyond basic. They've logged over 400 hot fires on those Archimedes engines. Instead of tiptoeing around the hardware just to get a clean power readout, they're intentionally forcing it into rapid, excessive restarts. They want to figure out exactly when the metal fatigues, because the goal isn't just making sure Flight 1 survives. It's guaranteeing they reach total reusability by that 10th flight. So they absolutely know they're going to break expensive components on the test stand right now.
Okay, hold on. Let me just make sure I'm tracking this. They got a surprise cash cushion from a regulatory refund, right? And instead of letting it boost the quarterly gross margin, they basically volunteered to take a preemptive loss against future test wreckage?
Yep. It's a brutally conservative accounting move, which honestly shows a massive amount of operational swagger. They just cleared the decks.
Conservative accounting swagger is such a good phrase, Miro.
I'm copywriting it. But seriously, it maps perfectly to how they're handling pricing for Neutron. The entire aerospace industry is starving for medium-lift rockets right now, which gives Rocket Lab incredible leverage. Listen to CFO Adam Spice on the call. He said, "We brought Neutron to market with a $50 to $55 million ASP with a commitment really not to do any significant discounting for early launches."
Wow, so they just flat out refuse to run an early bird sale? That's a pretty aggressive stance for a rocket that's still doing ground tests.
Right, but when customers are this desperate to lock in launch dates for the late 20s, you don't need to discount. And having that kind of leverage isn't just about selling cargo space anymore. It ties directly to why they're absorbing Iridium's telecom network.
Yes, I really wanted to pull on this thread, because moving from just a delivery service to an actual communications provider, that's massive. But hold on, are they trying to set up a consumer network here? Because trying to steal Starlink subscribers away from SpaceX feels a little suicidal.
No, but that's exactly the issue most people get wrong. They're actively bypassing the whole consumer broadband bloodbath. This isn't about streaming movies from orbit.
Okay, so who's the target then?
The Department of Defense. It all comes down to the specific spectrum they just bought. The Iridium asset uses L-band, which has entirely different physical properties than broadband. It pushes through harsh weather and works indoors. Rocket Lab's using it specifically for positioning, navigation, and timing, all the specialized, ultra-resilient architecture the military depends on.
Ah, that makes so much more sense. You don't mess with consumer turn, you lock in sticky government contracts with unique tech.
Exactly. Peter Beck was incredibly clear about the endgame. I'll just quote him. "The most successful space companies will be the ones that have the keys to space, i.e., can build and launch their own satellites." It's full vertical integration. You build the hardware, loft it on your own rocket, and run the defense network yourself.
That's honestly kind of a brilliant feedback loop. Because if you control the whole chain, you aren't waiting on outside vendors or praying for pad availability. You just build the entire ecosystem yourself.
Right, which goes right back to that margin compression we flagged earlier. Absorbing distressed component makers like Mynaric crushes their free cash flow right now. They're pouring capital into untangling supply chains, but the ultimate prize is never having to rely on a third-party merchant again.
But is it worth wrecking your near-term profitability just to own every piece of the puzzle?
Well, it's worth it if the alternative is sitting around waiting for a vendor while your launch manifest evaporates. You buy the headache to guarantee the schedule. And management clearly thinks it's the right trade, even though they know it's going to hurt in the short term.
Right, which actually brings us to the third quarter outlook, because they're definitely bracing for that exact impact.
Exactly. They expect third quarter revenue to hit around $258 million at the midpoint, so the top line keeps moving up, but they're forecasting adjusted EBITDA to fall back into a loss somewhere around negative $20 million.
Okay, so revenue climbs, but the losses widen, and the gross margin guide drops to roughly 30%. So that's the Mynaric component drag we mentioned earlier, just fully showing up in the math.
Yeah, plus the sheer capital cost of getting Neutron ready. Although CFO Adam Spice did mention they expect to see spending shift from R&D into actual flight inventory. That's a solid operational signal, but it still burns a ton of cash.
So if you're tracking this stock next quarter, you probably shouldn't be obsessing over near-term profitability. The real variable is whether Neutron actually reaches the pad by the end of the year.
And that window is definitely narrowing. Management admitted they're more focused on reaching cadence safely rather than rushing Flight 1. So if it slips into next year, the market might forgive them, provided the testing data holds up.
It's just a wild dynamic. They're doing this incredible military engineering, expanding into telecom, basically building an entire space ecosystem, but the execution bill is massive.
And it's coming due right now. Ambition isn't the issue here, it's just delivery.
I feel like that summarizes the entire space industry. All right, well, I guess we'll see if the math holds up next quarter. That wraps things up for us today.
Always a pleasure. Catch you next time.
Before we head out, if you like catching these corporate dramas as they unfold, tapping follow on your app is a really easy way to stay in the loop. Just a reminder that this entire show, our voices included, is a fully synthetic AI project, turning SEC filings into same-day audio, crunching Rocket Lab's aerospace numbers so you don't have to. We'd love to hear what you think or what ticker we should decode next. So shoot us an email at earningsunscripted@datamadness.ca.
Talk soon.